Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for April 7th, 2016. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. And what you notice most about this time frame right now is that prices have finally endured a big time trend up and are now stuck in the mud here as we've reached the HVN. And that was our primary idea, our primary theory from these lows, was that if we were going to reject from rejection zones down here, then we were likely going to rally back to an area of acceptance where the market wants to do business. Upon doing so, we'll likely get stuck in trading a range. And so far, that's all we've pretty much done. Now we need to see a larger trading range develop so that we can identify the key areas to fade back and forth as this thing develops. Obviously, right now the market's happy trading around 61s. That's acceptance. 61 quarter is composite VPOC, and you can see 1, 2, 3, 4 to 5 days where it's traded right around that level several times, and that's likely going to continue to be the case short term. Now, if there's any failure to see acceptance above 61s, expect more of a rotation downward to find a low, at which point you'll likely snap back up and push to a new high, and then that's when we could begin to see this trading range. But right now, there's not really anything super actionable in terms of buy here, sell there. We're adding a long-term target, and we're likely to stay there at least for a little bit until things start to shake out. If we look at the ES on an intraday basis, you can see we've started the day with selling pressure already. So that gives you an early bearish bias to the session. Here's the previous session's high, 60 half. Here is composite VPOC 61s, rejected cleanly, dropped lower, pushed below the previous month's close, and continued downward. So right now, price is sitting right on the previous session's closing VWAP, which is value for the most part. This is an area where bulls want to defend for a retest, perhaps back at overnight VPOC, which is 58.75. Failure to hold 48s opens up a continuation into 5-day VPOC at 20.40.75 and a likely rotation to the bottom of value at 20.36. Any push into 20.35 to 20.36 could be a buying opportunity back up. Okay, let's take a look right now at crude oil. Here's a daily time frame of crude oil. We talked about before that any bounce likely into 57 to 65 is likely to be an area where bears will want to defend. Well, yesterday price pushed through that level and closed beyond it, and I mentioned that we're still looking for rejections in this zone. And what happened here was price rallied just shy of the previous month's close and then was rejected on these highs and has pushed back toward 37.65 where we're currently trading. If you look at an intraday time frame, this is also quite bearish, but right now, after this sell-off and a push through support, prices have bounced back into prior support and are now seeing initial rejection. So this could be an area where bears could be defending for a likely retest back at lows and that HVN at 35.17 with a likely continuation into the 100% expansion target at 32.50. So this is an early point here where we're watching for rejection for a potential push into 32.50. Any acceptance back above the previous month's close would rotate price back toward highs into 40 and 41 quarter. On an intraday basis, what you can see here, there's a couple of key ranges that I want to note. The first one is 38.33 to 41.90. This is the key level right here that we were watching. Price eventually took it offered and sold off. Failed to hold here below 36s, and this was snapped back to the recent high. So right now what's happening is actually the bottom of the key range here, 38.33, has become significant resistance in the current market. Didn't quite test it all the way, got about 3 ticks from that area proper and then sold off significantly. So if I drop into a lower time frame, you can kind of see how significant that quick rejection was. Early rally up, a quick rejection back down. A key range has formed now. So we have a key range to play off of the rest of the session. So watch 37.64 here for signs of rejection below, opens up a push above. Acceptance below this level opens up a continuation. 37.97 is very important, as is 38.30. So those are the key levels that we're going to watch throughout the rest of the session, see how this thing plays out. Taking a look here at gold. Here's gold in a daily time frame. Basically, gold has developed this very clear range. We have a very nice narrow range toward the middle to lower distribution of the larger range. and eventually we're going to see expansion here. I mentioned before that there are a lot of sell stops that are now below this range. You also have composite VPOC. So if there's any violation of 1205s, 1202s, this thing could manifest itself into a major sell-off into 1095s. As of right now, bulls are still defending that area, and pushing back to the top of this range is not out of the question. So I don't know if a break is going to happen soon or when the timetable is. We're just looking for expansion at this point. We've seen a significant rally to begin the year, and since then we've gone flat. This trading range and congestion here, this distribution will eventually feed the next phase of expansion, so we have to be on guard for watching for expansion. Until then, further chop until expansion occurs. On a daily basis here for the NQ, we've seen a continued uptrending price behavior, very solid advance so far. Pullbacks have been defended as we would expect, but right now we're seeing a very, very clear range develop, and so far prices have been rejected above the previous week's high all week long. So if there's any failure to see a move above that zone, we could see a push right back toward 44.50. Until this trend is broken, we're likely going to see continued overall trending behavior. Once this trend is broken and perhaps a break below 44.40 occurs, we could see a larger range develop, but we have to see that develop first. As of right now, we're still trending. On an intraday basis, you can see prices have been rejected above the previous week's high yet again, as we mentioned. That's this level here at 45.29. Additionally, prices above the previous session's high and the previous session's close all rejected. That led to a quick retest back at the previous month's high here at 45.10. Bulls short term want to defend that level for a shot at new highs, but failure to hold it opens up a path back to 5-day VPOC at 44.74. That's it for now. Let's see how this thing plays out the rest of the session. Good luck and trade well.